In this video, I will be talking about stocks and or money management. Please keep in mind that I am not a financial advisor. The strategies and the money decisions that I implement are based on my personal financial situation and my goals. How I decide to invest and manage my money may not be the correct strategy for you. You should not take anything said during this video or on the website www.wealthinspiredstudenteducation.com as financial advice. Always do your own research before making any financial decisions. Hello. So, today we're going to talk about one of my favorite companies, and we're going to talk about which is Arcimoto and electric cars, and we're going to talk about don't be greedy, okay, and how to deal with options versus stock. So, basically, what I do is when I buy, um, I would say 75% of my investments are long-term investments, and I'm playing a game where I research the company. I'm buying because I think in 5 to 10 years they're going to be doing something really special. And then 25% of my investment money goes to my speculation stuff, my short-term investments, my options, option play, and that kind of stuff. And so if I think something's going to go up in the long run, like I don't know when those spikes are going to happen. And what I tell people is a lot of times people get into the stock market and they try to time the market and they're always mad. They're always upset because if they sold a little bit before it got too high or kept going up, then they're like, oh, I sold too soon. I should have held it. And then if they hold it too long and the market goes down, they start freaking out and they're like, oh my God, I lost all my profits. I've been on this roller coaster many times, many times. So I decided to get off. I don't want to be on the roller coaster anymore. I don't want my life to be like the stock market, where if it goes up, I'm excited, and if it goes down, I'm depressed. That should not. If you're getting into that emotional loop, then you're doing something wrong. Okay, you got to get off that roller coaster. So when I take profits on something, I take profits, and I'm excited. And if it keeps going up, great. I'll reevaluate that company and I will either buy again or I will say, okay, whatever. There's hundreds of companies out there. See, the thing is that we get wrapped up emotionally because we invested in the company. There's hundreds of companies that go up. I have no cryptocurrency at this moment of this video, and it keeps going up and people are making money. And I'm like, good for them. I'm truly, I'm not saying good for them, like good for them, screw them. I'm saying good for them. I'm happy they're making money. I am not invested in it because I don't understand it fully, and that's not where I'm putting my money. So I'm just not involved or invested in that as and that's just how it goes. So there's hundreds of stocks that are out there. People tell me, "Oh, I just made this much money on JMIA or whatever stock." I'm like, "Congratulations, Yeah, that's good for you." Um, why? And now somebody wants to say, here's what, if somebody wants to say, I made this much money, here's what it's going to do in the future, and they're going to give me some interesting things about that stock and what it's going to do in the future, not just like, oh, I made a bunch of money and it's going to keep going up. Oh, well, then I'm like, well, good luck. So why is it going to keep going up? Well, it's been going up. All right, well, that's not a good enough reason. So that's not the reason I'm talking today. What I'm going to show you here is a little bit of FUV. So let's bring that up. Share the screen. Share the screen. Okay. So here is what I'm talking about. So FUV is Arcimoto. Again, you can look them up if you want to. You can invest them if you want to. So I have right now I have 110 shares in Arcimoto. You can see I was buying it back in 2019, so almost 2 years ago, a year and a half ago, a year and 8 months. So I bought 20 shares here at $2. I bought 40 shares at 275. I bought another 10 shares. So again, so we're talking, I spent what, $34 here. Is that right? Am I doing my math right? Yeah, I spent $80. I spent $40. So I'm showing you these numbers just to kind of say, look, you don't have to have a lot of money to invest in these things, right? So, I bought at $5, so I spent $50 here because I like the company. I didn't spend a lot of money on these shares. Um, And but I knew I researched the company. I like their financials. I like their leadership. You're going to constantly hear me saying that. I like their leadership. I liked where they were going. I like the future of the company. So I bought those shares. Now I bought another. You see here, in a year later, I bought another 30 shares. Okay, and I also bought two call options, right, at $2.40. So that means I spent $240 times two, so $480 on these call options. Right now, when I buy call options, you'll see that the call option, I bought it here on 10/20, and I was gonna. It's for January 21st, so 2021. So I was literally buying it for what is that, 4 or 5 months, right? So not even. So I was buying it for. I put it out a little bit. I try to put my call options out a little bit, um, if not, at least 3 or 4 months, because I want to give it time to move. All right. So that call option. So there's the two call options bought there, and then you'll see here on right a month later, right? A month later, the stock went up, and I sold both of them. Right, I made 749 dollars on this one and 1,049. Now I didn't make that much because you got to take out the 240. So if you take the 240 out here, I made $500 on that one. If you take out the 240 here, I made um, what is that, $800 on this one. So I was very happy. Now I didn't sell my other shares. I was using my options. The options went up, and now this was, if you look at the dates of these when I sold these options, 19 and 20, November 19th and 20. So let's look at what was going on in the stock market. All right, so you see this stock was floating around. You see the high here and the low here. It was floating around $5 to $10 for quite some time. Right around here is when I bought the options at like $6, and then bam, okay, it went up. So this is November. If you're looking, here's where I'm looking here. So look at this peak right here. So on November 20th, right? When did I sell? The 19th and the 20th, because it went up greatly, right? So it went from $4 or $5. It all of a sudden it went up to $16 here as a high, and it was $10 low, and then the next day it was a $20 high and a $13 low. So I was like, what am I waiting for? Let me take the profits. So I took the profits. I wasn't greedy. And now this doesn't happen all the time, but I happened to time it right at a peak. Now I could have said, well, man, if I had waited till, well, let's say they expired January, right? 15th. On January 15th, if I had waited till they expired, it would have been up to $17. But I took my profits, and I was lucky enough that it dipped back down, right? So it went back down right after it took it. That doesn't normally happen. I got extremely lucky there. All right. But I hit it right at the top. But I was happy because I saw it spike up, and I was like, let me take my profit. If it had kept going up after that, I would have been like, fine. I made my profit on my short term. I'm holding for the long term. That's why I have my shares, but my options I'm selling. Right. So let's go back. So I sold these two. They're both closed. Right. And then what I do, um, 12 a month later, it was down low again. So I bought another option. I bought an option for $380. Again, remember, an option is 100 shares. You're having an option of 100 shares, so it's 380. You have to put another zero on there or move the decimal point two times. Right. So $380. There we go. Yeah, could have just looked there, huh? Yeah. So anyway, so I bought another one. I bought a $15 call. All right. So let's see, on 12/3. December 3rd. So this is the day I bought it. So now it was at $13. So it had come down from the highs of 20 down to 13. And I said, I still believe in the company. I think it's going to go up. I think it's just taking a dip. And so I bought the dip. I bought another short-term option. And when did I sell it? I sold it on 210. So yesterday. Was it yesterday or 2 days ago? Yesterday. And you see, I sold it for $1,700, which basically means you minus out the 380. So what is that? 200, $1,200. let's say 400, so $1,300 I made on that deal. So because as you can see, it went all the way up. Now I should have sold it right here, right? I should have sold it on February 4th, but I didn't. I waited and I sold it on February 10th. Right. So February 10th, it was at 31 bucks. So I could have sold a little earlier, but I don't care. Okay. I got my profit. I made $1,700. Now this thing might spike up to $50, $60. That's fine. By the way, if it dips a little bit more, if it goes back down to 25, I will definitely buy another option. I'm going to buy some more shares because I really think the long term value of this company has not been realized at all. I feel like in 5 or 6 years, the share price will be over 100. So that's what I'm buying. And I don't flip my shares. My shares I buy for long term. If I'm doing short term stuff, if I think there's a catalyst, if I think something's going to happen, I feel good about the company or the economy, then I'll do my options for my short term. So, just giving you some examples. And again, don't feel bad. Whatever happens, whatever you decide to do, if you're taking a profit and it goes higher, who cares? Take your profit, be happy. You made money. Most people don't. And if you lose the money, it's like, all right, well, what can I learn? Why did I lose money? What can I do different next time? That's the point. That's what you do. You don't get on the emotional roller coaster and then you're doing FOMO and you're buying. Oh my God, it's going up, it's going up. Let me buy, let me buy. And then oh my God, it's going down. Let me sell. That's a bad buy. Buying high and selling low is a bad financial. It's a bad financial strategy. So everyone knows it, but you can't time the market. So if you know that, if you know you can't time the market, and you know that you're going to make mistakes, so point being is get out a little bit early. It's okay if it keeps going. If keeps going up, then you can always buy back in, right? Take some of your profit, and if you see it's still going and going and going, then and even if you don't buy back in, you say, whatever, I got my profit. I got money in my pocket. That's all that matters. Could you have had more? Yeah, but you could have bought Bitcoin. You could have bought Tesla 10 years ago. You could have done a lot of things. Be happy with your profit, stick with your plan, and anytime you're making money, that's a positive. There's always more opportunities in the stock market. Right? Don't get off the emotional roller coaster. All right, that's it for today. I talked enough. See you soon. If you would like to support me and the channel and would like to get up to 4 free stocks, you can sign up with Weeble so you can start your stock investing. There should be a link below or on the WISE website. You get 2 stocks just for opening an account, and you get 2 more stocks for funding it with $100. So you can get some pretty cool stocks for free, and I hope all of your investments are wise ones.